Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and this is the best illustration I've ever seen of why I got a Roth IRA at iTrustCapital. If you buy $10,000 of, say, Bitcoin on a normal exchange, value of your Bitcoin appreciates to $60,000. You sell your Bitcoin for a capital gain of $50,000. You pay $7,500 in taxes. If you bought that same $10,000 of Bitcoin in a Roth IRA, value goes to $60,000. Sell $50,000 of Bitcoin for you have a capital gain of $50,000. You pay zero in taxes, and then you can withdraw, I believe, starting at age 59 and a half. Pretty huge. This is why they're one of my partners. Been so for a long time. You can go to iTrustCapital.com/XRP Army, and you can get a $100 funding bonus, and you can open a Roth IRA. Roth IRA is the secret weapon for where I own XRP. Okay, the markets have pulled back. We got a 207 XRP. Look at this from Tim Draper, the billionaire, Bitcoin Maxi. Bitcoin goes mainstream. My $250,000 prediction finally reached. IPO window opens with $1 trillion company. Space flight to moon for passengers. Biocures drive longer lives. Autonomous vehicles move us around the roads and in the air. Amazing, awesome bonanza year. I like the sound of that. XRP bonanza year. Now, this is a good point being made by Tom Lee. And everybody should go ahead and get ready for this. I believe 2026 is going to be wild in a good way, but you're also going to have pullbacks. That's just part of it. Nothing goes up in a straight line.
Off to a pretty good start, which was not necessarily unexpected by you.
I didn't have any expectations, but it's always a good sign to be strong out of the gate, as you know, because what markets do in the first week or so give us a hint for how markets are shaping up for the year. Our base case was a rally, maybe to start the year, and then a big correction, and then a rally at the end.
A big correction, if not a bear market.
I think
those are your words, not mine.
Yeah, I think there'll be a point this year where it's going to feel like a bear market.
Yeah. What about the way that the market looks as the year has begun? What do you make of it?
I think it's encouraging because we have some breadth, right? Energy materials are doing well. The Mag 7's catching a bit, and crypto's doing well. But healthcare's strong, financials, industrials are strong, and small caps. I mean, it's sort of a broad market.
I mean, almost want to say an everything rally. It's not like tech is doing terrible. It's just being overshadowed by some of these other moves. The equal weight S&P ETF is coming off a fresh record high of its own. That says everything about what's driven this market.
That's right. I think for investors and for institutional investors, breadth being good is always a good sign, actually.
Is it sustainable? Is this the way it's going to look for a little while?
Well, I do think there's a couple of sort of macro tailwinds that should help stocks. One is I do think that the economic clarity is better because the tariff disruption is more in the rearview mirror, even though we could get that overturned. But in general, tariffs aren't going up. They could be flatter down. And the second is the Fed is really turning into a tailwind because the Fed is leaning dovish. They're focused on the job market. QT is over. We have a new Fed coming. And so all of these are, in some ways, I think, and they're not fighting inflation anymore, a put for the equity market.
Off to a pretty...
Okay, XRP Ledger's seen major increase in whale transactions, move value of 100,000. More on the network. Monday saw 2,170 of them. Yesterday shot all the way up to 2,802, 3-month high. And then we've got this. Senator Cynthia Lummis. We're close to bipartisan legislation that will stand the test of time. So here's what's going on with legislation. This is from Patrick Witt, Executive Director, President's Council of Advisors for Digital Assets. For the anti-rewards, so what's going on here is the banks behind the scenes and their politicians like Elizabeth Warren they have in their pockets are lobbying to have the Genius Act amended so that no stable coins can get yield. And these politicians are apparently trying to use that to say, well, you got to agree to that for us to vote on the Clarity Act. He said, for all the anti-rewards yield crowd currently threatening to withhold the support for the Clarity Act, I would remind you that the tanking the bill over this issue preserves the status quo, which you allege is intolerable. You will have achieved nothing, be reasonable. Then we've got this. This is from Jack McDonald at Ripple on the on stable coin yield.
Crypto in a minute. I'm going to give 20 seconds back to you. Hi, I'm Jack McDonald, and this is Crypto in a Minute. How are stablecoins being used in yield-generating opportunities? There's basically two ways that you can use a stablecoin to generate yield or interest on your investment. First, you can invest in an interest-bearing stablecoin, and in that case, the issuer directly shares the interest that they get from investing your dollar in the reserves and share that with you directly. Those sort of investments are available in some jurisdictions, but not most. The other way you can do it is to use your stablecoin and as collateral, invest in other sort of opportunities. You can think about investing in DeFi protocols like Aave or providing liquidity to automated market makers. In either case, you're using your stablecoin on-chain to generate some interest in the same way that you can think about a savings account where you get a little bit of interest on the side. You bring greater efficiency and greater utility to your dollar while using it on-chain. And there you go, you get your 10 seconds back.
All right. We did have net inflows January 7th for Solana, and this was the first day, I think, that there were outflows on XRP, but I believe that's because XRP had run up more than anything. People are going to take profits like in that scenario. This is the guy, the CEO, I think he's the CEO of Rumble. It's not clear, if it's not clear, I'll make it really clear. Rumble Wallet will compete directly with Coinbase and Venmo, but we're not custodial and we cannot shut down your account. It's true financial freedom to buy, hold, and tip crypto. Built and backed by Tether and Rumble. So I asked him, hey, since it's true financial freedom, I'm assuming I'll have the freedom to hold XRP in that wallet too. And I think MoonPay is his partner, so I asked them the same thing, when XRP integration. He says the Rumble Studios loaded up with significant budget for creators to do Rumble Wallet ad reads. If you're a creator that streams, use Rumble Studio, talk about the wallet to your audience and get paid for it. This is start of the largest ad campaign Rumble's ever done. And then here he is talking about this.
This is a completely non-custodial. It's owned by you. It's true financial freedom. And it gives the ability to seamlessly tip to creators. This is a completely non-custodial. It's owned by you. It's true financial freedom. And it gives the ability to seamlessly tip to creators. This is a...
And then he said this.
The best part is it's multiple different currencies. You have, multiple different crypto assets. You have Bitcoin, which you can receive, Tether, which is tied to the US dollar, and you have XAUT, which is the gold stablecoin.
So right now, from reading between the lines, they don't have XRP. I don't think I played this clip from Monica Long yesterday. If I did, I'm sorry.
2025 was a big year for Ripple for both our organic growth and then also inorganic. So we had acquired 4 companies last year with the fundraise as well. We are now focused on integrating those businesses and continuing to grow.
I wanted to get some more color on the fundraising specifically because it included this one structure, certain protections, the right for those companies that you sold shares to sell shares back to Ripple at a guaranteed price and guaranteed return and preferential treatment should a major event like a bankruptcy or sale occur. Can you give us a little more context, a little more color on why you were willing to offer those terms?
So the overall structure for the fundraise is very, very positive, very favorable for Ripple. We were really pleased to welcome Fortress and Citadel onto our cap table, in addition to a number of other crypto native premier funds. And what they really saw was that our business is working. Our strategy of creating digital asset infrastructure for businesses and financial institutions, alongside the inflection point that stablecoin payments hit last year, was something that they wanted to be a part of. And as we point more toward applying these technologies to the world of capital markets, having investors like Citadel and Fortress and others are great strategic partners on that front.
Right. I hear the case for why they wanted to be part of the Ripple story, but I'm wondering, in terms of the structure of the deal, offering those protections, was it necessary to get that deal done and to secure a big valuation?
To my knowledge, they were excited to be to be investors in Ripple, and we were very pleased with how the terms of the deal panned out.
Hey, Monk.
Okay, we're going to go into DAIXRP.com. We got more. You can go to join through YouTube by clicking join below any of these videos, or you can join through X by hitting subscribe. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe. Hit the like button. Tell your friends and family. Away we go. Okay, I wanted to play this. This is Caroline Pham talking about the crypto capital of the world.
Chairman Pham, I'd love to get your take on just making crypto America kind of the crypto capital of the world. I think you've all and I have been building in the industry for a while, and it feels like every couple of years the industry goes back and forth between it's all in on China, and then China shuts down Bitcoin mining, it goes to the States, then SEC cracks down on it, then it goes overseas, then it comes back. And how do you think about making it so that does not happen again, that America is the crypto capital of the world?
I love this question because I worked at one of the biggest global banks in the world, so I know exactly what it's like to have to thread that needle between your legal entity strategy, what are your permissible activities, where do you want to find the talent, where do you want to set up your, key hubs, that kind of thing. So I feel like I actually am fairly uniquely qualified to answer this question and figure out how to do it. So I'll tell you how the CFTC is making sure that America is the crypto capital of the world, right? So number one, we cannot understate the chilling effect of, like you've all said, the regulatory posture of the last several years, right? If all of your regulators are publicly, even if privately, they are okay with the technology and obviously examining it and understanding that people are, utilizing blockchain technology in a safe and sound manner, which the Prudential bank supervisors were doing. But if publicly you're saying that crypto or blockchain is bad, then people doing things that are illegal is very bad for business. Going to jail is terrible for business, right? Having an investigation that goes on for 3 or 4 years is horrible for your business. What's going to happen to your investors, right? Look at your cap table. So I just feel like this is such a basic thing, but businesses and companies want to do the right thing because that's good for business and it's good for their customers. It's good for their employees. It's good for their management. It's just, people want to do the right thing, generally speaking. All right, so changing that narrative, changing the overall tone from the top, getting that messaging. I think the executive order from day one was super powerful from the president. And then obviously the president's working group, passing the Genius Act, huge, working on market structure legislation, huge. And then what we're doing at the agency level. One of the things I've done to really make sure that we change the tone and the narrative is I actually went on a roadshow, like the greatest roadshow on earth, which is selling America, pitching America. So I went to Money 2020 in Middle East, and I went.
All right, well, you kind of get the picture. Look at this. Venezuela's stock market is now officially up 100+% since President Maduro was captured. This is what happens when you vanquish dictators, folks. I'm going to skip that because I wanted to show you this. Trump, this is interesting because we covered this a lot over the last few years. Trump has banned large institutional investors from buying single-family homes. The American dream is increasingly out of reach. So these institutions have been buying homes, and I've always felt like this was probably what has been driving the home prices up and keeping them up. And he's stopping it, or he's trying to stop it. Do you remember? Well, here they're talking.
Want to get down to Washington? We have some breaking news out of the White House. Eamon Javers has that for us. What do we know here, Eamon?
Scott, we've got a new post here on social media from the President of the United States who says he is taking action to deal with inflation in home costs. The President taking to social media to say that I am immediately taking steps to ban large institutional investors from buying more single-family homes, and I will be calling on Congress to codify it. People live in homes, not corporations. I will discuss this topic, including further housing and affordability proposals and more at my speech in Davos in 2 weeks. So the president here is saying that the American dream of owning a home has gotten out of reach for too many Americans, particularly young Americans, and says he is going to take steps to block large institutional investors from buying homes.
All right. Now, do you remember? Because that's what I think was going on. And I think what this really is Trump is vanquishing some of these globalist ideas. Remember, you'll own nothing and be happy. That's what they were trying to do.
I find it fascinating.
And by the way, back when I used to talk bad about Klaus Schwab on YouTube, this is part of the reason I created this group, is because YouTube went in and deleted 2 weeks worth of my videos and then denied it, where I talked bad about Klaus Schwab and the World Economic Forum.
It's actually the new world, and it's also built on the platform concept. You create a platform where everybody can share goods, services, and this will be very much the future. The future will not necessarily anymore a world where people own things.
Right, so because this weirdo in Austria, where it is, because he says so, we should all share things instead of work hard and have goals of owning things. What a sicko.
Where people share things. Now this has quite some implications on the economy, because you have to produce less goods in order to achieve the same satisfaction. You can share the goods. The World Economic Forum is engaged into a big program to look at the implications. For example, how does it affect property activity increase? How does it affect the measurement of GDP? So it's a new world. It's a fascinating world, and it will be the world of the future. We will share much more what we are now used to own.
We now used to own. How sick is that? This is from Arch Public about 2025 versus 2026.
I think 2026, as per Tom's comments, is going to be significant because you're going to see the fruit finally sort of come bear with the amount of scale associated with TradFi and the quote-unquote product that will be created around Bitcoin and Ethereum principally. You're going to see again the options markets, the structured product markets, all the stuff that Wall Street likes to do to generate meaningful fees really start to take off. It's been a conversation, and it's been we're doing this or we're going to do this, sort of process through the second half of 2025. But then you're going to see all of that happen and see how it's going to affect the crypto markets for real in 2026. It's going to be fascinating.
All right. And then we have this. This is from Securitize. Tokenization 2026 will be bigger.
Tokenization. You've heard this term. That's the future of finance. What I could say is I'm bullish. It's just the real fact of it.
If you think about what tokenization is, it's essentially upgrading the ledger where capital markets run, technology that is public, distributed, cryptographically secured, etc., which will improve how people transact with securities.
Tokenization is like a freight train. It can't be stopped, and eventually it's going to eat the entire financial system.
We've always been using technology technology to do a better job for the client. And we're going to do the same thing in tokenization.
We believe the next step going forward will be the tokenization of financial assets.
Tokenization is an innovation, and we at the SEC should be focused on how do we advance innovation in the marketplace.
Think about what that means. A complete rewiring of the financial system.
Everything is going to change. Thanks for listening.